Good evening, everyone.
Good evening, sir.
Good evening.
Madam.
Good evening, Madam Sarah.
Good evening, Madam Sarah.
So today I want us to look at numbers to do with ABC analysis. I decided to put the class together, both August and December sitting, because we are looking at past paper numbers relating to ABC system. So with the December sitting, I want to conclude this ABC system, how questions are set to do with ABC. Some of them I had given them to you as assignment numbers, whereas others probably I hadn't given them to you. So we can go through them together so that even those doing August sitting, we can save time and we don't go through those numbers again. So we are going to start with March 2021, question 2. That's the first number we are going to look at, March 2021, question 2. March 2021, question 2. March 2021, question 2. So in this number here, they told us that Enterprise Uganda Limited, EUL, was established in 2014 by a group of farmers in Chegegwa district to engage in agro processing for value addition and high profitability. So they tell us that EUL produces a range of products, among which is cassava flour, starch, and dairy feeds. EUL's managing director attended a workshop organized by the ICPAU in Feb 2021, where facilitators explained the relevance of business process re-engineering and activity-based costing system in improving performance. The facilitators indicated the pitfalls of traditional costing system in regard to determination of product profitability. The MD shared with the accountant about the above concepts, and both agreed to adjust from traditional costing system to ABC system immediately so as to see how product profitability would change. The accountant decided to perform a pilot using the accounting information for the year ended 31st December 2020. All overhead costs under traditional costing system were charged to products using direct labor hours. Below is the accounting information extract relating to the 3 products for the year ended 31st December 2020. So they gave us the output in kgs, direct labor hours, selling price per kg, material cost per kg, material purchase orders, sales orders, machine maintenance frequency, net profit as per traditional costing system. Then they gave us the overhead as indicated there. Then they say that all direct labor is paid at 15,000 shillings per hour. Other overhead costs will be absorbed to products using direct labor hours. So from there, they told us that you are the accountant at EUL, advise the MD of EUL on whether to adopt ABC system, then process of implementing business process re-engineering. That one we shall look at it when we look at that aspect of business process re-engineering. So we are focusing on part A, whether to adopt the ABC system. So I told you that when they want us to advise, it's not a matter of computation. We have to compute and later on tell them what we've revealed from our computations. These people here want to switch from the traditional costing system, like they have told you that the MD shared with the accountant about the above concepts, and both agreed to adjust from traditional costing system to the ABC system immediately, so as to see how product profitability would change. So these people are currently using the traditional costing system, but they are saying it is not good for them. So they want to shift to the ABC. Now they are telling us to advise whether to adopt the ABC system. I told you that you must look at the position of the company before the ABC system, then the position of the company after the ABC system. But relating to what? We need to ask ourselves, in which regard are we going to advise? So the basis of us advising must depend on the challenge they are facing. Which challenge are they facing? So they can give you in the required that whether to adopt ABC system basing on profitability or basing on costs. But if in the required they don't show you basing on what, then you need to go back to the essay and see from the scenario given to you, in which regard are they wanting you to advise on the ABC system. When you look at paragraph 2, they told you that here, EUL's managing director, MD, attended a workshop organized by ICPAU in Feb 2021, where facilitators explained the relevance of business process re-engineering and ABC system in improving performance. The facilitators indicated the pitfalls of traditional costing system in regard to determination of product profitability. So their challenge is product profitability. Currently, they are using traditional costing system, but they are saying it has challenges on product profitability. So if they want us to advise whether they should adopt ABC, our advice should be based on their challenge, which is product profitability. So we need to compute the product profitability. And product profitability implies that you need to show the profit for each product. So that is the basis you should use, product profitability. So compute the profit for each product and advise whether they should adopt ABC. So it means that we are comparing the position or the productivity of the company when they are using ABC and when they are to use traditional costing. So I told you that usually the examiner computes for you the profit as per traditional, and he requires you to compute the profit as per ABC. But if he has not, yes?
So you're trying to say that you base, like when they tell you to advise, you base on like what they have told you, either the profit or the cost.
Yes.
So when it's if it's the profit, you compare the profit for ABC and
Tradition.
what? Traditional, meaning you start calculating from the profit and you get the contribution. But now if they don't tell you to compare according to profit, let's say they tell you to compare according to cost.
So you compute costs. Remember, costs you have two. You have the direct costs and the indirect costs. So you show the total costs. So you show the direct costs or the variable costs. You show the overheads, then you get total costs. So you show before they adopted ABC, their total costs for product A were these. But after ABC, product A has these costs. So where are they performing better? Of course, where you have lesser costs, that is good for you. But where you have more profits, that is better for you.
All right.
So profits are computed by getting revenue minus total costs. So we have to show the revenue, then we show the total costs so that we can show the profit. So if the examiner has given you the profit as per traditional costing, that is good. But if he has not given you the profit as per traditional costing, you have to compute it. That means you must know the principles of traditional costing system and ABC. So when we look at the scenario he has given us the net profit as per traditional costing. So that means our challenge is to compute the profit as per ABC so that we compare the two profits. So traditional is computed. Now for us, we are going to come and say profit as per ABC system so that we compute that because it's not given. So profit using ABC system.
Excuse me, Sarah.
Yes.
Is it prudent enough for us to put the company name before, like when answering?
No, we don't need to show the company name.
So in the
Reason
exam, we
being,
don't.
you
In the
see
exam,
this heading
yeah.
in the exams, even the heading is not required. You will not get time to do all these things. So what we want you to show us is the profit. So the heading that you put, it's not relevant. So that's why we advise students to put a brief heading because you don't have time to write a lot. But if you feel you want to show, and this company was called NFL, or it was called EUL. So if you want to say EUL's profit using ABC system, well and good, no one will penalize you. So even if you just say profit using ABC system and you don't put the name of the company, no one will penalize you. Marks are not given for the heading. So there is no single mark you're going to get for the heading.
Okay, thank you so much.
So here we want the product profitability. We need to show the products whose profits we want to. So we have cassava flour, we have starch, we have dairy feeds. Those are the three products we show. So come and show cassava flour.
Madam Sarah, your network is breaking.
Starch feeds.
Sarah, your network is not
It is
stable.
revenue minus total cost. Looking for revenue, get price. Sorry about that. So we are saying revenue is price times quantity. The selling price they gave us is per kg. It's important for you to see the unit of measurement. Are you getting me now?
Yes, madam.
Can you?
So I'm saying that it's important for you to show the unit of measurement. You see that I've told you selling price per kg. These examiners are normally stubborn. The examiner can tell you selling price per ton. Then he goes up and he gives you kilograms. He doesn't give you tons, he gives you kilograms. He wants to check whether you can change kilograms, whether you can change tons into kilograms or kilograms into tons. So you have to be very keen with the units, whether they are tallying. I cannot multiply selling price per kg with tons. That is not allowed. I have to multiply the selling price per kg with kgs. So here they have given us selling price per kg, meaning that our output should be in kgs, and indeed they gave us output brackets kgs. So that means you have uniform units. You don't need to convert anything. So I'm going to come and I show shillings under the 3 shillings everywhere. So if we want to put in thousands, you can show shillings in thousands. That is also allowed. So we are starting with revenue, which is price times quantity. So the price under cassava is 1,500 times the quantity. The kgs are 850,000. Then starch, we have 16,000 times the kgs, which are 100,000. Then dairy feeds, 500 times 800,000.
The figures are too huge. I think let's maintain the thousands up.
So if we are to cut off thousands up, we can come and show shillings in thousands, shillings in thousands, shillings in thousands. So if you want to reduce on your zeros. So if the working is direct, you may not put detailed workings for that particular variable. But when you realize that the working is long and you need to convert certain things, then you have to create a working. So what do we get? Cassava flour.
1.275.
Pardon?
1.275 thousand.
After cutting off the thousands.
Yes.
Next.
Next is 1.6.
1.6. Then lastly, dairy feeds.
400,000.
400,000. So that is revenue. So revenue is not affected whether you're using traditional costing or you're using ABC. Revenue for the two methods will always be the same. So after all the direct costs, the direct costs are normally labor and material. So if the examiner does not give you the direct costs, you directly or immediately move to the overheads, or what we call the indirect costs. And I told you that the indirect costs normally take up the form of fixed costs. So they are normally fixed in nature. So we have to see whether they gave us the direct costs or they did not. So if they did not, we directly go to the overheads. The examiner cannot ask us to use ABC when he has not given you overheads, because ABC and traditional costing system, they are used because of overheads. So the overheads have to be there. But direct costs, you need to analyze whether they are there or they are not. So do we have the direct costs or we don't?
We have them.
We do have direct labor.
So which are the direct costs there?
Labor.
Direct labor.
Direct labor.
So we have a material cost here per kg. So we have direct material costs. So we can come and show variable costs or direct costs. So you can come and show variable costs. So they are called variable costs or direct costs, because for them, you can trace them to their original source. Like they have told you material cost per kg, meaning that this cost is as a result of the kgs. So
And
come
I'm
and
saying
show.
sometimes they give fixed costs, so we take them as direct costs.
No, fixed costs normally take the form of overheads, and direct costs are in the form of variable costs. That's why I've told you that the examiner may say variable costs or he may call them direct costs. Whereas he may say overheads and he doesn't directly say fixed costs. So overheads normally take up the form of fixed costs. So he may say fixed costs or overheads. So the material cost they gave us here is per kg. We need to multiply with the kgs. So we have 960 times 850,000. So 960 times 850,000. Then next we have 11,050 times 100,000. Then next we have 155 times 800,000. So we start with the material cost. What do we get?
8,160,000.
8,160,000. After removing the thousands.
Yes, please.
It's 8,160,000.
Yes.
Like
that.
8,160,000.
60,000. Yes.
Next.
No, sir, it is 816,000.
8,160.
816,000.
8,160.
No,
It is
8,160,000.
816,000.
816,000. Then 1,105,000.
Yes.
Then the last one.
124,000.
So we go to labor cost. So we move to the labor cost. So labor cost here under, they told us that all direct labor is paid at 15,000 per hour. So we have a direct labor cost, which is 15,000 per hour, no matter which product you are looking at. So meaning that for cassava flour, we are going to get 15,000 times the number of hours for cassava flour. And they told us that the direct labor hours for cassava flour are 850. So we are going to say 15,000 times 850. Then for starch, we have 1,000 hours. So we have 15,000 times 1,000. Then 15,000 times the number of hours. The number of hours here are 400. So come and get the cost. So here definitely it's 15,000. So what is the first labor cost?
12,750.
12,750.
From where are you multiplying by 15,000?
Cost per hour.
Isn't the rate 15,000?
It is.
It is.
They said all direct labor is paid at 15,000 per hour. So meaning that the labor cost is 15,000 per hour. So if I want to see the labor cost for starch, I get 15,000 times the hours for starch. For cassava flour, 15,000 times the labor hours, and so on and so on. Have you got it?
Yes.
So if they had not given me the 15,000, the labor rate, and they had given me the labor hours, I would not have a labor cost. A labor cost only comes if they have given me a labor rate to use. So labor hours are not a cost. So labor is only a cost if they have given you a rate. And indeed, here we've been given a rate to use. So after 15,000, what do we have for dairy feeds?
6,000.
6,000. So we don't have any other direct costs. So sometimes they give you other variable costs, but in this question, we don't have any other variable costs. So if you don't have other variable costs, then that cost is not there. So when we get revenue minus variable costs or direct costs, we get contribution. We come and show contribution before we show the fixed costs. So revenue minus variable costs always gives us contribution. Don't forget that. So I want you to show the contribution for each. Is there anyone who has not understood that?
Kindly pardon on the labor hours. Thank you.
They said the direct labor rate is 15,000 per hour. So you go and see if they have given you the labor hours. They are given here. So we just need to get 15,000 times the hours for each of those. Contribution.
446,250.
For 6,250.
First one.
Yes.
Next.
80.
80,000.
Which one is that?
This one has.
80,000.
You want to tell daddy that black
250.
270,000.
70,000.
70,000. So move to the next after contribution. So the examiner came and gave us overhead costs. So come and say overhead costs.
Oh.
So come and show overhead costs. So this is where the ABC system is going to come in. So overhead costs. So when we are to use the ABC system, we have to list all the overheads incurred during the period first, because ABC system believes that each overhead has its own cost driver. So we cannot mix the overheads, unlike the traditional costing system, which believes that all overheads are brought about by labor hours or output or machine hours. This one says, no, each of the overhead should be analyzed separate. So we come and list the overhead costs. So the overhead costs, first of all, we have material handling costs. We come and show those ones. we go to the next. After material handling, we have machinery repairs and maintenance costs. So machinery repairs and maintenance. Machinery repair and maintenance. So go to the next. Next is selling and distribution. Selling and distribution. Then lastly, they gave us other overhead costs. So other overhead costs. So ABC system believes that we must create a working for each of these. So come and create a working. This is going to be working. Working. So material handling. So working one is material handling. So ABC system believes that each of the overhead has a cost driver, and therefore we must compute what we call an overhead absorption rate. An overhead absorption rate is the rate used to charge overheads to the different products. Without the overhead absorption rate, I cannot charge the overheads to the products. So the examiner may be lenient with you and he computes for you the overhead absorption rate. Other times he may not be lenient with you. So here, the examiner did not give us an overhead absorption rate to use for each course. He just gave you the material handling costs and so on. So you need to show of the 101,250 that was incurred, how much went to cassava flour, how much went to starch, and how much went to dairy feeds of this amount of money given to you. So it is only the overhead absorption rate which can help us see that. So we first of all identify what we call a cost driver. A cost driver is a factor that causes this particular overhead here. So you need to look at the information given to you by the examiner and see which appropriate factor you are going to use to charge this overhead here. Or among the information given to you, which variable do you think caused the material handling costs? That is what we call a cost driver. So what do you think of all those variables given to you? What fits material handling costs?
Material purchase orders.
Material purchase orders.
So we said that we use judgment and we find the closest. So material handling costs. Here, the most appropriate is material purchase orders, because these material purchase orders are relating directly to the materials themselves. So meaning that material handling costs, we can use material purchase orders. I told you that cost drivers keep on changing. Next time they can give you setup costs. And that is what you have to use for material handling costs. So depending on which variables the examiner has given to you, that's what you base on to choose a cost driver. So we are saying the cost driver is material purchase orders. Is there anyone who has not understood that?
Yes, Madam Sarah.
Yes.
Is there a scenario where they give you both the settling cost and the material handling cost?
They give you the material handling costs and the material what? Setup costs.
And settling cost, yes.
Yes, because material handling costs may not be the same as setup costs. So each of them, you have to identify the cost driver. They can even share the same cost driver. So you need to see, like if they gave me material handling costs and they gave me material purchase orders and number of setups. So that means the number of setups will be relating to setup costs.
Thank you.
So let's compute the OAR. So OAR is the overhead absorption rate. So this rate is what we are going to use to charge this cost here called material handling. So how do we compute that rate? We get the cost we are apportioning, that is the material handling cost. So we go and see how much of the material handling cost we were given. The material handling costs we were given 101,250,000. So I come and I say OAR is equal to 101,250,000 divide by the total cost driver. Remember, your cost driver is material purchase orders. We need the total material purchase orders for the 3 products. So go and add your material purchase orders and get the total. So what do you think is the total for material purchase orders?
120.
120.
120. So divide by 120. So what do we get as the OAR?
843750. 843750.
843
7.5.
750 shillings per order. It is a rate. A rate is always shillings per something. So per order, because you've divided with orders. So from there, you have to show us what goes where. So our first product is cassava flour. So we come and show cassava flour. So to show the share for cassava flour, we are going to get the rate, which is 843,750 times the number of orders relating to cassava flour alone, because now we are looking at a single product. So the material purchase orders for cassava flour are 30. So times 30 orders.
Excuse me, Madam Sarah.
Yes.
Is there any penalty for cutting the zeros while computing the OAR? In case I just
no problem
do
if you want to cut off zeros.
Okay.
Because in your question above, or in your statement above, you've already cut off the 3 zeros. So meaning the answer you're going to give us, you're going to cutting off the 3 zeros again. But here, the answer we are going to get, we have to recall that we are not taking 3 zeros. So what do we get? Cassava flour.
25.
2.5.
3125.
Pardon?
25, 312, 500.
2.5.
Like that.
Yes.
We go to starch. You use the same rate throughout. Don't change the rate. It's only the orders that are going to change. So we have 843,750 times the orders for starch. They gave you 20. So what do we get there?
16,875,000.
like that.
Yes, please.
We move to the last one. So go to the last product. The last product here is dairy feeds. So dairy feeds. $843,750 times 70. What do we get?
59062
Yes,
500.
500.
59.
It is 8.
It is
59.
5906.
59062
500.
500.
500.
Like that.
Yes.
59 million.
Yes.
So we take those above 25,312.5 because we are not including the thousands. So recall that. So it's 25,312.5. The next we are taking 16,875. Then the last one, we are taking 59,062. 0.5. So I hope everyone has understood material handling. So we go to machinery repairs and maintenance as number 2. Machinery repair and maintenance. Come and look for the cost driver. Cost driver is, so go back to the question and we choose the most appropriate. So from that question, what do you think is the most appropriate cost driver for machinery repairs and maintenance?
Maintenance
frequency.
So we have machine maintenance frequency. That is the most appropriate there from what they have given us. So machine maintenance frequency.
Just a minute.
So come and look for the OAR.
Yes, baby.
So OAR is equal to the cost we are apportioning. So OAR is equal to the cost we are apportioning, and that is 202,500,000 divided by the total machinery maintenance frequencies. So add, what is the total?
400.
400.
Yeah.
Someone is asking, would I be penalized if I calculate OAR without stating the formula first? We are not stating the formula. We are just computing directly. We don't need you to state for us the formula, but we need you to first of all tell us what is the cost driver. That is the basis of ABC. ABC depends on a cost driver. So you're going to miss out a mark by not showing us the cost driver. Unless the examiner has already identified for you the cost drivers. So there you don't need to tell us cost driver is. But now the cost total. The total, we say that it is 400.
400.
So what do we get?
506, 250 for machine maintenance.
416, 250.
It is
506, 250 shillings per machine maintenance.
Per maintenance. So you can say per machine maintenance or per maintenance. So we go and show each product. So the first product is cassava flour. So cassava flour is equal to 506, 250 times the number of machine maintenance, which are 100. Then we also go to starch. 506 so you also multiply by the cost driver there for starch. So
the first one is 50 million. Cassava flour is 50 million. 625,000.
So the first one is what?
56,000.
625,000. The second is 126. 562,500.
The second one is
126. 562,500.
the third.
The third one is 25.
25, 312,500.
25.
312,500.
So go and take that. $50, 625, 126, 562. .5. $25, 312. .5. So we go to working number 3, selling and distribution. So 3. Selling and distribution costs. So we need to identify the cost driver for this one as well. So we'll go back to the question and see the most appropriate cost driver for selling and distribution. So what do you think is the most appropriate cost driver for selling and distribution?
Sales orders.
Order.
So sales orders. So we'll come and show cost driver is sales orders. So we look for the OAR. So OAR is equal to the cost they have given you to apportion. So the cost we want to apportion is worth 3,037,50,000 divided by the total number of sales orders. So we'll go back
1,000.
and see the total number. So it is
1,000.
1,000. So meaning that we are going to get 303,750 shillings per order. So that is our overhead absorption rate. So we are going to have 303,750 times the number of orders for cassava flour. They are 500. Starch, we go and also show 303,750 times the number of orders. They are 300. So we go. Dairy feeds. Dairy feeds, we have 303,750 times the number of orders, 200. So cassava flour, how much do we have?
The teacher, right? 151, 875,000.
75,000. Starch.
91 million, 125,000.
Dairy feeds.
67,50,000.
$60.
750,000.
67,50,000.
Yes.
So let's go and show this. 91,125. Then lastly, we have 67.50. So we move to the last overhead, number 4, other overhead. So other overhead costs, that is what we are moving to. So we need to go back to the question and see the most appropriate cost driver for other overhead costs.
Labor hours. So other overhead costs.
Direct labor hours.
So other overhead costs here, according to the question, they told us that if we are to look at the question in the last sentence, they say that other overhead costs will be absorbed to products using direct labor hours. So when you see the examiner telling you that an overhead will be absorbed basing on something, that means he wants you to use that as the cost driver. So he's saying will be absorbed to products using direct labor hours, meaning that the cost driver for other overhead costs will be direct labor hours. So we are going to come and say other, that is for other overhead costs. So other overhead costs. So cost driver is direct labor hours. So come and compute the OAR. So OAR is equal to, come and compute that rate, the cost they have given us to use. Here, they have given us the cost of 405. So we have 405 million divided by the total labor hours. So how many labor hours have they given you?
2250. 850, 1000 plus 400.
Remember, your labor hours, direct labor hours, you have 850 plus 1000 plus 400. So that gives us how many total?
2250.
1,250.
Which gives us 180,000.
Just 2250.
Yes.
Which gives us
180,000 shillings
180,000 shillings per hour.
per hour.
So we come and show cassava flour 180,000. So times the number of hours. So 180,000 divided by the number of hours, which are 850. We go to starch, 180,000 divided by the labor hours, which are 1,000. Then next, we have 180,000 divided by the labor hours, which are 400. So what do we get first?
153 million.
153 million.
180.
180,000.
Next.
180 million. 72
The last
million.
one.
72 million.
72 million.
72 million.
So go and show that above. 153,000. Then 180,000. $72,000. So now we can get the profit. So it can be a profit stroke a loss because we've completed all the costs. Yes?
I thought we are holding the zeros up.
Yes. Remember, you have 153 million. So when we cut off thousands, it becomes 153,000. So we are getting contribution and subtracting all the costs we've computed, all the overhead costs we've computed. Please compute very fast, contribution minus these costs we've computed, so that we can show the profit or a loss. So it can be a profit or it can be a loss. Please hurry up.
For cassava flour is 65,437.5.
Pardon, it is?
65,437.5.
Next.
65.
The same.
7.5 again.
The same.
If it's a 2,
52875.
875.
So that is the profit stroke loss. So now they've given us as per traditional costing system. So you see, cassava flour is 63,750 when they use traditional. But for ABC, they'll get 65. That is an increment. Next, they have
Sarah, for start is 65,347.5.
but they said it is the same
No,
as this one.
that figure is that is correct. Yes.
Now, for starch, it's 30, again is 65. Then for dairy feeds, it is 52 against 90. There we have a decrease. So they want us to advise. So we come and write that when ABC system is introduced, the profit for cassava flour, when ABC system is introduced, the profit for cassava flour will increase. The profit for cassava flour will increase from 63,750,000 shillings, will increase from 63,750,000 shillings to 65,437,500 shillings.
Sarah, sorry, I had lost you.
65.
Kindly start again. Sorry to take you back.
In ABC system, when ABC system is introduced, the profit for cassava flour will increase from 63,750,000 shillings. The profit for cassava flour will increase from 63,750,000 shillings to 65,437,500 shillings. To 65,437,500 shillings. While that for starch, while that of starch will increase from 30 million shillings, while that of starch will increase from 30 million shillings to 65,437,500 shillings, to 65,437,500 shillings. Dairy feeds profit will decrease from 90 million shillings. Dairy feeds profit will decrease from 90 million shillings, from 90 million shillings to to 52,875,000 shillings. To 52,875,000 shillings. Then we write that ABC system is a better ABC system is a better costing system than the traditional costing system because it clearly allocates overheads to products. It clearly allocates overheads to products basing on their cost drivers, unlike the traditional costing system. Unlike the traditional costing system. It clearly allocates overheads basing on their cost drivers, unlike the traditional costing system. Unlike the traditional costing system. So, like I told you already, ABC system is a better system always, because for it logically allocates these overheads to the products basing on their cost drivers. So we have a logical way and a fair way of allocating overheads to products, unlike the traditional costing system. That's why I told you that the traditional costing system was phased out because of its disadvantages. And the ABC system was instead adopted to overcome the challenges of the traditional costing system. So the system that is used of late is the ABC system. But like I told you, that doesn't stop us from learning how to apply the traditional costing system, or that doesn't stop us from knowing how the traditional costing system operates. But the ABC system is the one that is used because of its clear and logical allocation of overheads to products. So that's how we can advise. So we have to tell them what is the impact. When ABC system is introduced, what will happen to the products' profits? Then after showing them what will happen, then we can later on tell them why we are in support of the ABC system and not the traditional costing system. And that's what we've done there. So anyone with a question before we go to example number 2?
Madam, help me scroll down to see the heading of this table at the beginning of it.
Profit using ABC. Profit using ABC.
Okay.
Sarah?
Yes?
Should we, when giving this conclusion, should we consider also the overall profit for all the products, or we only look at individual impacts of ABC?
Individual because when you look at the profit, add the profit using traditional, then you also add the profit using ABC and see what you are going to get. You add and see what you're going to get.
Madam Sarah, kindly pardon me on the conclusion.
The conclusion, you have to tell them what will happen to each of the profits of each product, that the profit of this will increase from this to that, that from that. If it's a decrease, you also tell us the decrease, but you have to tell them whether to take up ABC or they should not. So we concluded by telling them to take up ABC system because for it, it logically allocates the overheads to the different products.
Madam Sarah,
Yes.
what if we had ended in losses? What could be the advice?
Still, you see, if a company gets losses fairly, it is better than the company getting profits unfairly, because a system can make you sure that you're having profits and yet you're not having profits. You're actually making losses. So ABC system, we are in support of it because for it, it shows us the reality, what will really happen after taking into consideration the practical or the logical variables and cost drivers for the overheads we incurred. Unlike the other system, the traditional costing system, so for it, it can deceive you that you have a profit and yet it's not a profit, you have a loss. So that's why we are saying that.
So, Madam,
Yes.
what you are trying to mean is that ABC system in all, it's better than the traditional system.
Yes.
It's making losses.
Even if it's making losses, but it logically allocates the overheads using cost drivers, something that the traditional costing system does not do. So we have to tell them that product A, the profit will decrease, probably it's decreasing from 5 million to 2 million. Product B, we are moving from a profit to a loss when we adopt ABC. However, ABC is logically allocating the overheads to the products using the cost drivers. That's why we should adopt it. So I hope you've understood.
Yes.
Under what circumstances can the question come to make us analyze using the overall profit of the company for all the three products?
It cannot come using ABC. So ABC, we are interested in individual.
On each product. Okay.
So if you look at, that's why I've told you to add the profits using traditional and the profits using ABC and see what you will get.
I've gotten the same.
The same. So
yes,
ABC and traditional costing, they give you the same total. The same total.
Okay.
So the total will always be the same.
Be the same. Okay. Okay.
But what changes is the individual profit. The individual profit will not be the same.
Okay, thank you.
So,
excuse me, Madam Sarah.
Yes.
Yes, I'd like to ask a question. When
Yes.
stating the explanation at the end of the question, when we are advising what system to adopt, is it okay to state the explanation based on the difference? For example, we can say when the ABC system is introduced, the profit of cassava will increase by this amount without necessarily giving the difference, the one for the traditional and the one for the ABC. If we just state the difference and say cassava will increase by this, maybe starch will increase, and then dairy fields will decrease by this amount. Is it okay to state it like that?
it is okay. You are telling us the same, because if you say that the profit of cassava will increase by maybe 2 million, so you're still telling us that they are moving from this to that. So you can explain basing on the differences. That is also fine.
Okay, thank you.
So let's move to December 2023, question 3. December 2023, question 3. Quickly, let's go to that. We've spent a lot of time on the other number. Let's also look at this one. December 2023, question 3. December 2023, question 3. So here they told us that KHL, located in Masaka City, is a member of Chinene Group Holdings. KHL's general manager supervises the departmental managers, and she reports directly to the company's board of directors. KHL has 2 departments headed by managers, and its accounting date is 31st October. The restaurant department has of recent performed poorly, and the board proposed discontinuation of its operations effective November 2023. The general manager attributed the poor performance to the post-COVID-19 effects, but the board was not convinced since accommodation department had reported profits for the year ended 31st October 2023. Below is the information extract for the year ended 31st October 2023. So they gave you that information. So they say that KHL charges an average price of $250,000 and $50,000 for accommodation and restaurant services per client, respectively. The company anticipates to register 4,000 and 20,000 clients for accommodation and restaurant services, respectively during the year ending 31st October 2024. The new finance manager advised the board not to discontinue operations of restaurant department because he believes that inappropriate decision techniques had been used. He indicated that CVP analysis of benchmarking, CVP analysis technique would easily show the firm's margin of safety. Then they said, he also hinted on use of benchmarking and business process re-engineering as useful techniques in the circumstances. He added that absorption of indirectly attributable operating overheads to departments on the basis of output was not appropriate. He proposed use of ABC system. Below are the activities and cost driver rates relating to indirectly attributable operating overheads for the year ended 31st December 2023. They gave you activities, accommodation, then restaurant, then the cost driver rates. Then they said, the operating overheads amounting to 87 million and 130.5 million were directly attributable to accommodation and restaurant departments respectively during the year ended 31st October 2023. Required. Part A, they wanted you to evaluate the viability of the new finance manager's advice to the board in respect of discontinuing operations of the restaurant by considering the margin of safety in percentage terms, effect of using ABC on the departmental profitability for the year, discuss the differences between those two models, and then benchmarking and business process re-engineering techniques. So my emphasis is going to be on part A, Roman numeral 2, because we are looking at numbers to do with ABC. So they want us to evaluate the effect of using ABC system on the departmental profitability. They have not told us to advise. You see, there is a difference between evaluating and then advising. Those two are not the same. Advising means tell us, should we adopt ABC or we should not? Evaluating the effect, tell us what happened to our departmental profitability. So if we want to see the effect of ABC system, we need to show what profit did they have before ABC? And if they introduce ABC, which profit will they have? So that we can see the effect. So they are telling us that these people here are using traditional costing system. That is what they are using. And they are telling us that here, the restaurant department has of recent performed poorly, and the board proposed discontinuation of its operations effective November 2023. So you see they have two departments, accommodation, restaurant. So you can see their profit before tax is a loss for restaurant. So they are saying, why don't we discontinue this department since it's performing poorly? So they say that the general manager attributed the poor performance to the post-COVID-19 effects, but the board was not convinced since accommodation department had reported profits before the year ended 31st October 2023. Then they said that KHL charges that and that. So that one. But they said the new finance manager advised the board not to discontinue operations of the restaurant department because he believes that inappropriate decision techniques had been used. So he indicated that CVP analysis technique would easily show the firm's margin of safety. He also hinted on the use of benchmarking and business process re-engineering as useful techniques in the circumstances. Then they say that he added that absorption of indirectly attributable operating overheads to departments on the basis of output was not appropriate. He proposed use of ABC system. So it means that currently their allocating their overheads on the basis of output. That is typical of traditional costing. So indirectly, they are telling us that these people are allocating their overheads using the traditional costing system, because it is the traditional costing system which allocates overheads to products basing on output, labor hours, machine hours. So that is traditional. Now, the new finance manager is telling them, why don't we use ABC? Since what we are doing is wrong. So meaning that whatever profit they have given you, this profit here is for traditional costing. Because they have not yet used ABC, someone is just advising them to start using ABC. So meaning the profit we have is not for ABC. So if we want to see the effect of ABC system, we need to show the profit using ABC system. So come and show profit using ABC system. This is what we want to do. Profit using ABC system. So we come and see where to start. You see, whether you are using traditional or ABC system, the profit is not affected. So revenue, variable cost, contribution, they are not affected, whether you are using traditional or ABC. So we are going to come and show that. Accommodation. So come and show the two. So come and show shillings in thousands. So shillings in thousands, shillings in thousands. So when the examiner has prepared for us a statement showing sales, variable cost, contribution, those ones we are not going to change them. They are the same, no matter the method we are using. So we can even start with contribution, because the effect of ABC does not start from there. So contribution. So come and put the same contribution. So contribution is 266,700. 266. Then 221,900. So we come and show. They gave us production overheads. So production overheads, remember the effect of traditional and ABC comes from overheads. So we need to see, they have told you the overheads, they have two of them. They have two categories. They have the production and the operating overheads. These two. Production overheads, operating overheads. We need to see which overheads we are going to adjust. So we go and see. Here they told us below are the activities and cost driver rates relating to indirectly attributable operating overheads for the year ended 31st October 2023. So
Madam,
these are activities, they are not
I have a
costs.
question.
Yes?
Something is confusing because the question says the effect of using ABC system on the departmental profitability for the year ending 31st October 2024. Then I'm seeing the information we are using is for the year ended 31st October 2023 on the table. So it is like, I don't know, are we not supposed to use like the information, the one that predicts for the year 31st October 2024, which has, they've given us the average price, then the company anticipated clients for accommodation and restaurants.
So that one is going to give you what? Because you have a
And yes,
price, you also
yes,
have
there's a
the clients.
anticipated,
So that is
yes,
giving you revenue, right?
yes.
So
Yeah,
what about the rest of the information relating
that
to
is
costs?
what is confusing because
So you see, the examiner here, he's telling us to tell them the effect of using ABC system on the departmental profitability for the year ending 31st October 2024. So for the year ending 31st October 2024, when does this start? It starts in September 2023, right?
yes,
It starts in September 2023. So the information they have given us is relating to the year ended 31st October 2023.
yes,
Do you see that?
yes,
So now if it's ending 31st October 2023, remember, the overheads they are giving us are relating to the year ended 31st October 2023. So I cannot use revenue for 2024 on costs of 2023. I have to be uniform. But if the examiner had given me revenue of 2024, then he gives me costs relating to 2024. It is okay. There I would have used information for 2024. But now he's giving me 2023 costs. So how can I subtract 2023 costs from revenue of 2024? Do you see that?
okay,
So
thank you so much.
either the examiner made a mistake and he said that for the year ending 31st October 2024, and yet he wanted 2023, because the information he has given us is for 2023. So
Yes,
I have to use 2023 information because that's what he has given me. He has not given me for 2024.
Excuse me, Sarah.
Yes.
Could it be that is anticipating the sales for 2024, and but he also expects the cost of 2023 to be the same as the cost for 2024 to be the same as that of 2023?
He has not told us. Unless he has told us that the cost of 2023 will be the same as the cost of 2024. So that means I'll get the revenue of 2024, subtract the cost of 2023. But he has not told me that anywhere. He's not telling us. So you see, everything he's giving us is for 2023. Everything. And he's not telling us that the revenue will change, but the cost will be the same. So we cannot assume. So definitely we have to use 2023 data. So we come and we've indicated the contribution. Now, the overheads they are giving us here, remember we have two types of overheads. We have production and operating. We need to see which overheads were affected. So they told us that below are the activities and cost driver rates relating to indirectly attributable operating overheads for the year ended 31st October 2023. So meaning that the overheads we have here are indirectly attributable operating overheads. Then the same examiner told us that the operating overheads amounting to 87 and 130.5 million were directly attributable to accommodation and restaurant departments respectively during the year ended 31st October 2023. So the operating overheads, you see in our statement here, we have operating overheads. So the operating overheads is giving us 189.7, then 193.5. But here in the statement is telling us that no, the operating overheads you're going to take are 87 million and 130.5 million were directly attributable to accommodation and that. It means that the operating overheads, I have the directly attributable. So I'm going to come and say directly attributable, So they've called them directly attributable overheads, operating overheads. Directly attributable operating overheads. So accommodation, we have 87,000 because we've cut off millions. Then we also have 130,500 in brackets there, like that. So I've indicated the directly attributable operating overheads. So I go back here. Operating overheads, divided them into two. They have divided them into the directly attributable and the indirectly attributable. So the operating overheads have been subdivided into two. The directly attributable, which we've indicated. So they told us that below are the activities and cost driver rates relating to the indirectly attributable operating overheads. So if you want to see the indirectly attributable operating overheads based on this data, that's what we are seeing here. So come and say indirectly. So we also have the indirectly attributable operating overheads. So these ones we have a working. So I come and I put working one. So for them, when they were using the traditional costing system, they just said in their statement, they just came and put operating overheads by adding the directly and indirectly. But when we are using ABC, they have indicated the directly and then they have indicated the indirectly. So the indirectly attributable operating overheads, this is where they have given us the activities and cost driver rates. So that means here we have the ABC system coming in, because the ABC system is the only system that looks at cost drivers and their rates. So here they give you the activities and then they give you the cost driver rates. So when the examiner gives you a cost driver rate, That means he has already computed for you the overhead absorption rate. In other words, the indirectly attributable operating overheads, we are going to come and show that there are three. We have marketing, we have telephone, we have repairs and maintenance. So this is where ABC is going to come in. So I'm going to come and say indirectly attributable overheads. So let me not create one working for these because they are different, and ABC is going to come in. So under the indirectly attributable overheads, we have marketing costs. So come and show marketing costs. We have the telephone costs. So telephone costs. We have the repairs and maintenance costs. Repairs and maintenance costs. Repair and maintenance costs. So what I want you to see here is that the examiner had given you the rates, the cost driver rates. That is what we've been calling the overhead absorption rate. So an overhead absorption rate, another name for it is a cost driver rate. So if you don't want to call it overhead absorption rate, you can say cost driver rate. That is another name we use. So whenever you see the examiner giving you the cost driver rate, that means he has already given you the OAR. So when it comes to marketing costs, he has told you marketing costs per advert, that the rate I'm giving you is per advert, meaning that if I'm looking for the marketing cost, I'm going to get the marketing cost rate, which is 3,950. So I don't even need a working here. Marketing costs, I'm going to say 3,950,000 times, they've told you that rate is per advert. Marketing cost per advert. So that means for accommodation, I have to multiply with the number of adverts, which are 12, whereas for restaurant, the number of adverts are 4. So I'm going to get 3,950,000 times 12, then 3,950,000 times 4. I don't know whether you've got the difference between the number we've just done about ABC and this number here. So in the number we've just done, they had not computed for us the OAR. In the number we are doing now, they have computed for us the OAR. So when the examiner computes for you the OAR, you don't need to again come and tell us cost driver is this, therefore OAR is this. It is already computed. So just multiply with the variable with the cost driver they are giving you. So if they're saying per advert, just multiply with the number of adverts for the particular products. So 3,950,000 times 12, what do we get?
4,700.
7,400.
4,700.
$15,800.
15,800. We go to telephone costs. So telephone costs, they are telling us it is basing on
4740,000
per call. So telephone costs per call. So the rate is 356. So we are saying yes, are the figures like that for marketing costs?
Yes.
Are the marketing costs like this?
Yes.
Yes.
So
Yes.
telephone costs, we are having 356 times the number of calls. The number of calls they have given them to us.
20,000.
So 20,000 for accommodation and 5,000 for restaurant. So what do we get for the first one?
7,120.
120.
700, 120.
Next.
1,780. 1,780.
Repairs and maintenance costs. So repairs and maintenance costs, they have said, you see, they have also given you 1,000 for accommodation, restaurant 9,000. So you have 2,080 times accommodation 36,000, then 2,080 times restaurant 9,000. So let's compute very fast. What do we get?
74880.
74880. Next.
18.
Pardon?
18720.
18,720. So we see when we look at their statement, when they were using traditional costing, they got their contribution, they subtracted the production overheads, they subtracted the operating overheads. So we are seeing that the operating overheads are the ones being affected by the ABC system. So the production overheads, for them, they don't have any effect. They have not told us there is any effect. So for the production overheads, we come and leave them as they are because they have not told us that there is any adjustment to make on them. So the only adjustment they told us to make was on operating costs, where they told us to show the direct and the indirectly attributable. But the production overheads, they didn't tell us any effect. So that means we leave them the way they were. So meaning these ones were not affected by the method they were using. So 28,300 and 36,500. So 36,500. So that we come and show the profit. So profit using ABC. So remember, we are getting contribution and subtracting the overheads.
Sarah, I have a question or a concern, if I can say that. Hello.
Sorry about my network. I was asking for the profit using ABC so that we look at the third number. Please hurry up. What is the profit?
2,000.
The 2,000.
2,000.
22.
22,000.
Then the next.
18,600.
Loss.
A loss of 18,600.
A profit.
It's a profit.
A profit.
It's
Of
a real
18,600.
It's a profit
Yes.
of 18,600, yes.
So they've told us to advise on the effect. Remember, when before they got 48,700, now we are getting 22. Then 8,100 the loss, again is 18,600. So we are going to write that when ABC system is introduced, the profit for accommodation, when ABC system is introduced, the profit for accommodation, will decrease from 48,700,000 shillings. The profit for accommodation will decrease from 48,700,000 shillings to 22 million shillings. To 22 million shillings, while restaurant division's loss, of 8,100,000 shillings, will become a profit of 18,600,000 shillings, while restaurant division's loss of 8,100,000 shillings will become a profit of 18,600,000 shillings. You stop there. They've asked for the effect. They have not told you to advise whether they should introduce ABC or not. So don't start advising. Just tell them the effect. So that is the effect which we've told them. So don't advise, you just stop there. So I hope you understand.
Last statement.
While restaurant division's loss of 8,100,000 shillings will become a profit of 18,600,000 shillings. So you stop there. So don't tell them whether they should go ahead and introduce ABC or not, because they have not asked you to advise. They have just told you to evaluate the effect of ABC system on the departmental profitability. So that will be the effect.
Excuse me, Madam Sarah.
Yes.
I'm kindly inquiring. Now, we had these operating overheads and we had the overall totals in the income statement of the question. However, these directly attributable operating overheads were 87,130,500. So I'm inquiring, is the difference between these 87 and 130 the one that is it the one that is being apportioned through marketing costs, telephone costs, revenue and maintenance costs? Or because I was looking for that difference, that balance, I thought it was the one we were supposed to apportion for.
So now the balance, you see, the examiner already gave us the rate, to depend on to allocate the balance. You get, the examiner has given you the rate to use for the balance. So that's why we don't need to see the balance, because the rate is already given to us. So if the rate was not given to us, then we would have first looked for the balance. So it's the balance we would have apportioned by looking for the overhead absorption rate for that balance. Then we see how to give it to the different departments.
Thank you, madam.
So lastly, about ABC, let's just look at one number. We are looking at September 2022, question 1. We are going to only pick out the part of ABC from that question 1. September 2022, question 1. September 2022, question 1. We are only going to pick out the part of ABC. September 2022, question 1. They say that Bukwali Farmers Community Circle was established in 2008 by 15 farmers. BFC was registered with the Registrar of Cooperatives in 2010, and the membership has grown to 516 members as at 31st December 2021. BFC operates in Fort Portal City and the districts of Bunyangabo, Kabaroli, Kamwenge, and so on and so on. The annual general meeting is the top organ that supervises a 9-member board of directors. The new board was elected during the AGM held on 28th Feb 2022 and took office effective 1st March 2022. BFC was hard hit by COVID-19 pandemic, which reduced revenue due to the decline in the loan disbursements in the last 2 years. The new board identified governance challenges inherited from its predecessors that failed to make final decisions. The old board failed to decide on letting out own premises and then rent a nearby small building. There is also no formal policy on communication, which has led to insider dealing and misuse of confidential information. The Chairman, Finance and Investment Committee proposed introduction of secured loans to non-member farmers in the operational districts under guarantee of the members. This proposal was intended to improve returns on investment since loanable funds were available. BFC currently offers unsecured loans categorized into emergency, short-term, and long-term on the basis of members' share capital and savings account balance. The Finance and Investment Committee members supported the proposal of secured loans, but they were divided on guarantors. Some suggested individual guarantor, while others preferred a group of 3 guarantors, reasoning that the individual is very risky and may require the loans to be insured. The performance of farmers' circles is always affected by boom and recess seasons. So forecasts were made and the chances are at 40% for the boom season to occur in the next 5 years. The financial statistics from the circles regulator indicate that loans guaranteed by a group of farmers perform as follows. So they gave us the annual interest income, season boom recess, emergency short-term and long-term loans. The annual net interest income is normally reduced by 4% and 2% during boom and recess seasons respectively for loans guaranteed by an individual. The chance of disbursing secured emergency short-term and long-term loans with group guarantors is likely to be 30, 50, and 20% respectively during the boom season. There is a 25% chance, 40% and 35% for issuing secured emergency short-term and long-term loans with group guarantors during the recess season. The probability that insured secured emergency short-term and long-term loans with individual guarantors will be disbursed during the boom season is that and that respectively. There is a probability of that to disburse insured secured emergency short-term and long-term loans respectively with individual guarantors during the recess season. The chance of disbursing uninsured secured emergency short-term and long-term loans with individual guarantors during the boom season is likely to be 60, 25, and 15% respectively. There is a probability of 0.6, 0.3, and 0.1 to disburse uninsured secured emergency short-term and long-term loans respectively with individual guarantors during the recess season. The management accountant rejected introduction of secured loans because they were less profitable compared to unsecured loans. She based on the budget forecast for the first quarter of the year 2023 when secured loans are anticipated to be introduced. Below is the budgeted profitability analysis for first quarter of the year 2023. So they gave you the net interest income, operating costs, and then the net profit. So they said that the chairman, finance and investment committee contested the management accountant's profitability analysis since it was based on traditional costing system. He requested the management accountant to provide revised budgeted profitability analysis based on ABC system. The budgeted operating costs for quarter one of the year 2023 as follows: rent, vehicle fuel, salaries and wages, stationery and printing. The following activities are budgeted for quarter one of the year 2023. They gave you vehicle fuel in liters, floor space in square meters, loan applications number, loans officer time in hours. The financial experts advised the old board to completely let out their own building and shift to a low-cost lettable building in Fort Portal City. They argued that the primary business of any financial institution is provision of financial services. BFC borrowed 995 million from Canadian Bank at 8% interest per annum for 25 years to construct on building with a grace period to commissioning date. The single-story building was commissioned in January 2018. The management accountant has indicated in the budget for the year 2023 that the net cost of 102 will be incurred on the building as detailed below. So they gave you those details. The following costs are expected to be incurred during the year 2023 if BFC rents the neighboring building. Required. Advise BFC's new board on the category of guarantors to be considered for secured loans. Use decision tree analysis. most profitable loan category for the year 2023, use ABC system. Implications of letting out the building to SBUL, use relevant costs. Explain to BFC's new board the elements of effective communication process, how the planning and control functions relate to the decision-making process. So, first of all, I want to comment about the elements of effective communication process. Which elements make communication process effective? Which elements do you think make the communication process? Yes?
Context.
The context.
The sender and the receiver.
So we have the sender, the receiver, we
The
have
medium.
The feedback.
the medium of communication, the feedback. So those
The
are what you
time.
call the elements of effective communication. In other words, what makes communication to be effective? If there is a sender, it means that communication will be effective. If there is a receiver, information will be effective. If the message you are communicating is relevant, if the medium you are using is also appropriate. So those are the elements and others. Now, I'm interested in part A, Roman numeral 2, on the most profitable loan category for the year 2023. They want us to use ABC system. Now, this is a question 1 number, which is compulsory, having different topics put together, but you need to pick out what relates to which topic in a particular part that they have given you. So you can see in part A, Roman numeral 2, the examiner was specific, use ABC system. So from all that long history they have given you, we have to pick out the part which we have to use in Roman numeral 2. Not all the information given to you is going to be used for one part. No, you have to pick out that this part is for Roman numeral 2. This part is for Roman numeral 1. This one is for this part, like that. That's how you can break down the question 1 number, which is compulsory. It is normally long. So we want to see most profitable loan category using ABC system. Now, these people have 2 types of loans. They have the unsecured loans and the secured loans. So we have to see, where does the examiner talk about us applying ABC? That is the part we need. So when you look at this paragraph here, they say that the chairman, finance and investment committee contested the management accountant's profitability analysis since it was based on traditional costing system. Remember, the management accountant is here telling us here from this paragraph, they have told us that the management accountant rejected introduction of secured loans because they were less profitable compared to unsecured loans. So according to the management accountant, he was telling them, look here, we don't need the secured loans. The secured loans are less profitable compared to the unsecured. So for him, he's showing that unsecured loans are more profitable. That's why the profit for the unsecured loans is higher than the profit for the secured loans. Then they say that she based on the budget forecast for the first quarter of 2023, when secured loans are anticipated to be introduced. Below is the budgeted profitability analysis for quarter 1 of the year 2023. So this is what he presented to the board or to the committee. So the chairman, finance and investment committee contested the management accountant's profitability analysis since it was based on traditional costing system. So he said, no, what you're giving us is wrong. Because for you, you are basing on traditional costing system. That's why we are not accepting. He requested the management accountant to provide revised budgeted profitability analysis based on ABC system. So if they're telling us to use ABC system to tell them which one is more profitable, when they use traditional, they realize that unsecured loans are more profitable. But now they are telling us, no, provide us another report using traditional, using ABC system. What we've given you is for traditional. So we are going to come and say profit. So profit using ABC, because the effect they want is on profitability. So using ABC system. So we are going to come and we show the unsecured loans. So unsecured loans. And then secured loans. So our assignment is to show revised profit. Revised. So we want to correct what the management accountant did wrong. So we go back to his report, profitability report, and we correct it. So net interest income. Do you think the net interest income is affected if we are to use ABC or traditional costing? Is net interest income affected?
No.
No. Remember, this is a circle. So interest income. So whether you're using ABC or traditional costing, revenue is not affected. That one I told you. So revenue is not affected. And our revenue here is net interest income. So we have to take the same figure. So we are going to come and say shillings in thousands. Shillings in thousands. So we are starting with net interest income. So 42,750. Then 58,200. So net interest income is not affected. So we go to the next part of his report. The next part of his report is about operating costs. So operating costs, when we look at the components of the operating costs, look at the data he told you. He told you that the budgeted operating costs for Q1 of the year 2023 are as follows. Remember, this is Q1 of 2023. So in his operating costs, he had rent, he had vehicle fuel, he had salaries and wages, he had stationery and printing. But the figure he's giving you is a combined figure for the two products. So meaning, you see, when you see these costs not directly allocated, that they're telling us rent per this becomes an overhead. So you have to apportion it using ABC. So this is where ABC comes in. So the operating overheads, he had the operating costs he had in his statement, he had overheads. But that means these overheads here, he allocated them using traditional costing. So for us, we want to correct the wrong he did. We want to use ABC. And if you want to use ABC, ABC says, for me, you have to show each overhead separate. Don't combine the overheads. So I have to come and show operating costs. So to use ABC, we have to show each of them separate. which traditional costing system does not do. For it, it combines all the overheads. So ABC is correcting that. So ABC says first list all your overheads. So we come and list the overheads. We have rent. We have vehicle fuel. So let's list all the overheads given to us there. So we have vehicle fuel. We have salaries and wages. Salaries and wages. Stationery and printing. So we have to show a working for each, unless the examiner has computed for us the overhead absorption rate. So look at the question, has the examiner computed for you the overhead absorption rates?
No.
No. So if he hasn't, we have to look for them. So come and show workings. So show working 1, working 2, working 3, working 4. So we move to the workings. So workings. Rent. So cost driver is, so what do you think is the cost driver for rent here?
Floor space.
Floor space.
So floor space. So come and say cost driver is floor space. Then we come and show the
Floor
OAR.
space.
So the OAR. So OAR, remember, it is the cost you are apportioning. You don't need to show us the formula. So you can call it the cost driver rate, or you can just say OAR. So it's the cost you are apportioning. That is 12,750,000. So 12,750,000 divide by the total cost driver. So we are dividing with the total floor space, and floor space is measured in square meters. So what is the total cost driver there?
170.
170.
Yes.
So what do you get?
75,000.
Just
75, yeah, 1,000.
Shillings per square meter. So meaning for unsecured loans, so we're going to come and say unsecured loans, 75,000 times the number of square meters for unsecured loans. So unsecured loans, the square meters are 96, whereas the other ones are 74. So what do we get for rent?
7,200.
7.2.
Next, 7.2 then. Yes.
5,550.
500 and
like that.
Yes.
2, vehicle fuel. So we go to vehicle fuel and we also identify the cost driver because they did not give us the rate. So cost driver, according to the information they gave you, is what for vehicle fuel?
Vehicle fuel in liters.
So it is vehicle fuel liters. So it's vehicle fuel liters. Vehicle fuel liters in liters. So compute the OAR. So OAR is the cost we are apportioning. 30,960 divide by the total vehicle fuel liters. So what is the total vehicle liters? Yes?
7,740.
7,740 giving us what?
4,000.
4,000 shillings per liter. For unsecured loans. So 4,000 times the number of liters, which are 1,935. Then secured loans. 4,000 times the number of liters, 5,805. So what do we get for the first one?
7,740,000.
Next.
$23,220,000.
The salaries and wages. So salaries, that is 3. Salaries and wages. So we come and show the cost driver. I want us to finish this number. So cost driver. So you go back and see the most appropriate. So what do you think is the most appropriate there?
Loans officer time.
So loans officer time, because here, this is a bank, meaning their staff, mainly a loans officer. So loans officer time, loans officer time. So the OAR, we have to get the cost we are apportioning. The cost given to you here is 11,700,000 divided by the total cost driver. What is the total loans officer time?
720.
720. So what do we get here? Please hurry up.
16,250.
Shillings per officer time. So unsecured loans. 16,250 times the time. The time here, 180. Then 540. 250. Secured loans. So what do we get?
The first one is 2.925.
2925. Then the second.
8775.
Stationery and printing number 4. So 4. Stationery and printing. Stationery and printing, we go back and see the cost driver according to the data. So cost driver is what?
Loan
applications.
So loan applications.
applications number.
So what is the total loan applications number?
500. 500.
500. So divide by 500, 12,090. Divide by 500, what do we get?
24,180.
24,180. 24,180 shillings per loan application or per application. So meaning unsecured 24,180 times the number of loan applications, 350, then 150. Secured. Please, let's compute very fast.
First one is 8,463.
10, 400.
8463.
8463.
Then the second one.
3627.
It's 8.
3627. It's not 8, it is 3627.
So can show the profit. So the operating overheads, we are adjusting them using ABC because they are the ones which were affected. So come and show the profit. Please compute the profit very fast and we conclude.
I can't resist the first scroll up to it is 17,028.
The first one is
16,422.
16,422. The second one
17,028.
17,028. So if we go back to the question, the examiner was asking using ABC. So to advise on the most profitable loan category using ABC. So we are going to say that when ABC system is introduced, the the most profitable loan category will be the secured loans. The most profitable loan category will be the secured loans with a profit of 17,028,000 shillings, with a profit of 17,028,000 shillings, which is higher than that.
Madam Sarah, pardon, from the beginning.
When ABC system is introduced, the most profitable loan category will be the secured loans with a profit of 17,028,000 shillings, which is higher than that, for the unsecured loans, which is higher than that of the unsecured loans, which is higher than that for the unsecured loans of 16,422,000 shillings, which is higher than that for the unsecured loans of 16,422,000 shillings. So they have just told us to advise on the most profitable loan category using ABC. They have not told us to advise them on whether to introduce ABC or not. So I cannot advise whether. They have just told me to tell them the most profitable. So that is our advice. So when you see a question is very long, don't fear. Go through it and see if they're asking for something you know about. Then you pick out information relating to that particular area. So meaning we've picked out the part for ABC. So other sets of information are for also other parts which relate to other topics.
Pardon,
Because
Madam.
you wonder why haven't we used all the information for ABC? Those parts also have their own topics. Yes, someone had a question.
Pardon on the comment. What is the advice?
The most profitable loan category is secured loans with a profit of that, which is higher than for unsecured of this. That is our advice. So I hope everyone has understood ABC, and if a number comes about ABC, everyone will be able to attempt it. So August sitting, let's meet tomorrow in the usual time for August sitting, people, so that we continue with our past paper approach. And I think we last looked at August 2024. So we shall continue with that. Have a good night.
Madam, kindly share the questions again that we are going to look at.
August 2024 sitting. Remember, that's the sitting we are looking at.
Yeah.
Madam
Good
Sarah,
night and thank you.
Madam, click abroad.